It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, March 8th, 2016, cruising our way through this second week of the month of March. You know, we're only a few days away from daylight savings time here in the U.S. Well, I'm giddy with excitement, right? Love watching the sunset right after that daylight gets shifted back. Don't forget, next week we're going to have an hour difference between U.S. and Europe. We'll talk more about that later on this week, so stick around with me here this week at a big, kind of a week adjustment between daylight savings time. We'll talk about that a little bit later on in the week, so stick around. We have another exciting newsletter for you guys and gals tonight. We're covering crude, S&P, gold, and euro. Starting off tonight on the oil markets, crude oil is bearish with a spike in channel this evening, which tells us to expect a bullish correction before we look to sell more tomorrow. Boy, oh boy, 5.5% up yesterday and 5% back down. Sorry, just shy of 5% back down. It feels like a buying opportunity here long-term on crude, but we're going to trade the chart tomorrow. I got a plan for crude oil traders tomorrow for you. E-mini S&P is bearish, trading inside a range this evening. With a recent test of the lows, we expect buyers to send this price back up to range highs for the E-mini. Got a great-looking chart here for the E-mini. A little bit tough at first, but if you look at it the correct way, it makes a lot of sense. We'll be talking about that in a moment. Gold is range-bound and consolidating ahead of Thursday's ECB meeting. Our plan is to buy low and sell high using failures at the extremes of the range. Boy, gold looks really sleepy right now ahead of Super Mario on Thursday. The euro, another market, sloppy ahead of Thursday's meeting. The 6E, right, nice and low volume right now ahead of Thursday's meeting. But a recent test of the megaphone low tells us look for seller failures to buy the lows on the way back up to the highs for tomorrow's session. Got a great plan for oil, E-mini, gold, and the euro. Before we jump into today's charts, though, and put the strategy together for tomorrow, I do want to remind you guys the only place to watch the full-length newsletter video is on our trading blog here at Sideways Markets. If you're watching the video on our YouTube channel right now, there's a link in the description of the YouTube video. And that'll take you over here to our trading blog. While you're here watching the full-length video, don't forget to grab a free pass to come out and attend our live trade room as a guest. Grab or register for our nightly newsletter mailing list. I'll send you an email every evening when our nightly newsletter is published. That way you never have to worry about missing another newsletter video ever again. Right below the video tonight, you'll see a spot to download all the charts you see me using in tonight's video. Nice and easy way to have those charts ready for your own trading computer tomorrow. And of course, over on the right-hand side, I'll encourage you guys to learn more about all of our strategies, learn more about what it means to be a member by joining our free trial on the right-hand side. And then don't forget, if you have any questions about anything we do here at School of Trade, no question too big or too small, we always have some live support, right? We've always got someone qualified to answer all your questions on the right side of the trading blog. You ready to rock and roll? Boy, oh boy, busy, busy week. What a day. What a day today. Had a great day at the trade room today with all of our members. Hope you guys had a great day as well. As you guys know, though, tomorrow's another day filled with earning opportunities, and hopefully we'll be ready for it. Tomorrow we only got the petroleum status report tomorrow for news, right? Only have that petroleum status report. We had no news on Monday, no news on Tuesday, and all they're giving us on Wednesday is some crude inventories. We did see the API number come out tonight at 4:30 p.m. Don't forget, if you're a student of mine and you're going to be with me tomorrow morning in the trade room, we'll be looking at the API number tomorrow morning at 8 a.m. Eastern Time. We have an API number strategy, and we'll be trading that tomorrow live in real time in our trade room. Come join me at 8 a.m. Other than that, though, all we have tomorrow is the inventory report. Don't forget, when we have 10:30 inventories on Wednesdays, our sitting on hands time is 10:15. And I don't personally trade oil after that news comes out. So as of 10:15, I'm done trading oil on Wednesdays. After 10:15, the volume drops. And of course, at 10:30, that volatility just kicks into high gear. We will be watching it tomorrow after 10:15. Remember, after 10:30 tomorrow, it's gambling on the oil markets. All the other markets are going to be completely acceptable, but you just have to remember, I love trading oil, but every Wednesday around that inventory number, it gets really difficult to anticipate. And the big thing is, and we talk about this every week, is when you're trading news, the volatility increases, but the liquidity decreases. The hard part is, kids, is that you can't practice that on a simulator. The only way to learn how to trade news is to do it on a real money account where there's actually a buyer for every seller. And boy, oh boy, is that a really expensive way to practice. So I'll tell you the same thing I tell all of my other students in the trade room. Crude oil is a fantastic market. You're going to get so many profitable trades every week. But after 10:15, we buckle down, sit on hands. If you're going to trade after the news comes out, I wouldn't touch it until after 10:40, right? Give it at least 10 minutes afterwards. But again, that runs right into the end of the morning. And so we try to make all of our money on crude right before 10:15 on Wednesdays. It's only a small sliver of the week that we have to avoid trading on crude. Everything else tomorrow, right? Of course, we have Thursday's ECB announcement, and we know that's why gold and euro. We'll talk about that more in tomorrow's newsletter. So tomorrow on the calendar, though, you got the inventory report at 10:30. Speaking of the oil markets, let's jump in here this evening. Crude oil is bearish with a spike in channel this evening, which tells us to expect a bullish correction before we look to sell more tomorrow. Had a field day selling today. We have a bear spike in channel and multiple levels of support to work with tomorrow. The spike in channel tells us there'll be profit taking here because everybody should be short on this market, and price is likely to correct as high as that 37.50 before coming back down for a measured move. Let's talk about a spike in channel real quickly here, just so you guys recall the proper way to look at it. Spike down leads into a channel. The most important thing about a spike in channel is to follow the direction of the spike. In this case, it's a spike down. Now here's what happens. Everyone is short at this point. Spike in channels are aggressive, in this case, bearish environments. That means that most sellers are still floating their stops, right? And they're still holding this move lower. Once we see the end of the day and once we see the completion of that spike in channel, most sellers are now going to take their profit. That profit will result in a correction. That correction is usually going to go somewhere between the highest point of that channel and the base of that channel. We call this the correction zone, right? Or the correction resistance, right? We'll call it the correction zone. What we're looking for now is we're expecting to see an opportunity for a very short-term buy. If we look for price to go higher, pull back, and then up into that correction zone. Buyers, if you want to take a swing at this, look for the high of that channel to hold as support, right? Or at least get a new higher high and a pullback that holds to send it up into that correction area. But don't get too greedy because this is where people get in trouble. Remember what I said at the beginning, follow the direction of the spike. The buying opportunity here is going to be the less reliable trade. The more reliable trade is going to be waiting for the next pullback after we test the correction zone. Buyers at this point, a lot of them usually think this is a bullish market now. It's not. It's just a bearish market that now, of course, has its correction. Look for the buyers to try to buy that pullback, right? And then look for price to collapse back down. The goal of this is to get this into a long-term measured move for the sellers. A, B, C, D, all the way down. We won't know where that measured move is going to be until we get to that point tomorrow. One more thing here. One more thing you want to keep an eye on here. Before this thing drops is watch out for a support trend line. That trend line is oftentimes resulting in a failure here. So you want to make sure you watch that rising support. Look for an opportunity here if that's the case tomorrow. It's not always going to be the case, but oftentimes it is. Look for a break lower, a snap higher, and then use the opposite side of that trend line, right, as your area of interest. Okay, so just like the buyers can use the top of that spiking channel, the sellers can use that rising support trend line, right, as an easy area of interest to get short. If you can't get in on the rising support trend line, look to sell those rips, and of course the target is back down right at that low. So now that you know how a spiking channel works, here's your spike down, here's your channel down, right? As you can see here, we have the spiking channel. Where's the correction zone? The correction zone is ultimately from the base of the channel to the highest, right? That first little swing high, right? So there's your correction zone right in here, right? There's that correction zone. Now, let's say the bulls here. Bulls, here's what you're looking for as price goes higher. New higher high, pulls back to the high of the channel, right? And then goes higher. The one thing you want to make sure you wait for is wait for the buyers to hold a pullback. Now, once we get up here, take your profit and wait for more information. You have to remember there's probably going to be a trend line here, right? And you're probably going to have a buying opportunity here, but it's likely to fail. Sellers, this is where we start looking for the failure. We're looking for buyers try to buy that pullback, and we're looking to sell into their stops. Watch out for that rising support. If it sells into their stops, wait for one more push higher here, wait for that opposite side of that trend line to hold, and then as you can see here tonight, I have the multi-day trend line waiting for us. This is going to be a first target, and then of course we'll look to get below it, use it on the opposite side, and then finish off what will end up being a major, right, measured move. Okay? So now you have a good plan for the spike in channel. I have to mention one more thing though. Zoom out for me a few days, and this market just might be a little bit bullish, right? Now, I don't spend too much time around the water cooler, but if I did have a water cooler, and if I had discretionary time during my day, and if I was hanging out around it, I'd probably hear a lot of people say, so, crude's going back to 50, huh? As you can assume, these levels of support down here, this feels like a beautiful buying opportunity for a long-term buyer. Now, as I always say to you guys and gals, don't trade what you think, trade what you see. And right now, we have a bearish spike in channel. But let's talk about what if that spike in channel fails. Because this is definitely something you want to be keeping an eye out. Because again, you don't need a microscope to look left and see we have a very big bull market here right now. And this might just be just a tasty pullback on our way up to, dare I say, $50 a barrel, right? I don't want to say 50, but it seems like that's what everybody seems to be plugging in, and it's a rational level. A lot of big producers and consumers have their budgets all really manipulated around $50 a barrel. So $50 is kind of the uncle point, right, where the tourniquet gets taken off, and a lot more capital is available now. And I really do personally believe that our world will be more prosperous here in the short term with price up around 50, right? My opinions about how that will happen, right, we'll wait and see again what the chart says. But it's easy to think this might be a deep pullback, right, for a wonderful buying opportunity. And you can see how this real long-term, right, multi-day trend line, you can see we just bought up, right, nice and quick. Doesn't mean it can't go lower one more time. I'm just saying, let's plan on that. So let's plan for a moment here. What happens if this spike in channel fails? We already talked about if the price breaks up, right, holds that pullback, we're gunning for trendline resistance. We're gunning for, right, that correction zone that we talked about. The buyers in this case have to be careful, right? I can't buy into that resistance area, right? We don't want to buy into resistance, but we may shoot right through it. And if we shoot through it, then we're looking for support to hold on the opposite side, and we're gunning for targets overhead. $38 a barrel, right, give or take, and of course the seller failure target back up around that 38, 39. If we get another 5% move tomorrow, it won't be totally surprising, but what we're definitely looking for is if we get back to these highs, look for a double top with a new higher high for a short-term scalp right back down. We're going to have to look at that in context. We're going to have to look at that in real time. So stick with me tomorrow, and we'll see if we can even get back up there. But now you have both plans, right? If this market completely reverses, you know where you're looking for. Time out at the correction zone. Let it poke through, buy the pullback, up to the failure. Up to the correction zone, buyers fail, back down. Where are we going, right? Multi-day trend line. Where are we going? Back to the low. Where are we going, right? Multi-day measured move. Relatively easy. As long as you know what you're looking for, right, you can wait for that proof tomorrow. Let's keep going. Got the plan for oil. Now let's try to make sense of this S&P. I'll tell you, if I removed everything off this chart right now, you would look at this market and think, this is a bear channel. And that's exactly what I think a lot of professional traders are hoping. You'll notice there is a bear channel here, and it is a bear.